good life. And they want a good life, yeah. G-Wagon a class, step in a eat, maga fast in a farraga my glass, chop up a freeway. Money up, you have a flask, but if you...
Hey TSWFX family, welcome to another episode of Forex Educational Notes in our series Forex course. This is the third episode, and today we will be discussing an introduction to Japanese candlesticks. So what are Japanese candlesticks? Japanese candlestick was developed by Munehisa Homa, who was a Japanese rice trader. He discovered that the price of rice on the market was influenced by human emotions, key term emotions. When the Japanese stock market was established in the 1870s, its techniques were used throughout. This technique was introduced to the Western world by Steve Nissen. Understanding Japanese candlesticks. When compared to bar charts or line charts, the Japanese candlestick is a lot more detailed and accurate in reading. There are three main types of candlesticks: an indecision, bearish, and a bullish candlestick. A bullish candlestick opens at a lower price and closes at a higher price. It is usually green in color depending on the theme or color theme used on the chart. These candlesticks shows that the bulls are in control as the price is pushed higher than it opened. A bearish candle opens at a higher price and closes at a lower one. It is usually red in color. These candles shows that the bears are in control as the price closes lower than it opened. Here is a picture depicting what the candlesticks are, and it will be explaining how both bear candle and bull candle differentiate each other. From top to bottom, you have the high, the upper wick, the open, candle body, the close, the lower shadow, and then low. Now, wicks are just to identify where price has been, or the high or the low. That's the whole purpose of wicks. The highs of the low of price in that specific time frame is what the candle wicks is. The body of the candle shows what's in between where it opened and where it closed. And the upper shadow and the lower shadow is just basically explaining where the length of the wick is, or to explain the length of the wick. So the only difference between a bearish and a bullish candle is that the open and the close inverse. So for the bearish, the difference between the bearish and the candle, as I said, is the inverse. So for the bearish, you have the close at the base and the open at the top, and for the bullish, you have the open at the bottom and the close at the top. So if price closes higher than where it opened, it will automatically be a bullish candle, and if price closes lower than where it opened, an indecision candle is a candle that closes at the same price as it had opened. This candle is normally called a doji. This candle usually shows that neither the bears or the bulls are in control as price is ranging. Okay, so now we'll get into what are hammer, or hanging man, and shooting star. Hammer or hanging man, it gets its name based on where it is on the chart.
Okay, so let's get into the psychology of what
it's a hammer.
candlesticks
If it's a resistance, it's a hanging man.
Even though this is a
shooting
bullish
star,
candle,
on the other hand, is always called a shooting star,
right.
and
Let's
it's based
explain
on
the
how they
psychology.
look. They get their
See,
nicknames.
price open here, right? Price went down, and then decided to close above. That's how the candlestick was formed. But why is this one bullish? Price opened at the top, went all the way down to this level, to the low. Then the bulls pushed price back up to this region, and it closed in that level. Now, with that said, the wick compared to the body is showing that the bulls have a lot more power than the bears. Remember, candlesticks, simply put, tells the psychology of the market in a specific time frame. So let's explain how the candlesticks work. Now you have this bullish candle followed by a bearish candle on the 1 hour time frame, but on the 2 hour time frame it's a pin bar, or what we call the shooting star. Let's explain it. We're going to start from the left to the right. So it's open here, right? It goes up, closes on the 1 hour. On the next hour, it goes all the way up, comes back down, goes all the way down, and then it decides to close slightly above where it began. Now, if we were to fuse this together, we would get that price open here, go all the way up, comes back down, and decided to close slightly above where it began. And that's how you got this over here. So really and truly, this candlestick is equivalent to this on the 2 hour time frame, because the psychology of the market is that price wants to go down. There's a lot more sellers in the market than there are buyers at this point, which is why you have the bearish candle here. And having that bearish candle, it shows and signifies that price wants to go down.
Making slow change, mama still slaving for a low wage. Tryna double up, yeah. 3 or 4 times, I ain't telling no lies, I just run it up. Never let a hard time humble us. Double up. I ain't telling no lies, I just, yeah.
Okay, so now we'll get into the evening star and the morning star. This is one of my favorite candlestick patterns. It's a 3 candlestick pattern, and it's usually seen at both resistance and support. Meaning, the evening star is usually seen at resistance because price is expected to drop, and the morning star is usually seen at support because price is expected to rise. This is one of the most used patterns, and it is one you must get very familiar with. This is GBP JPY, or British Pound Japanese Yen, and as you can see on this chart, we have 2 of them, and both of them are sitting on support. So we have the first one where price rejected the support level and went up, and it came back down. After coming back down, we see that there was a retest, forming a double bottom, and not only a double bottom, but also a bullish rejection and that hammer. Here we have an example of the evening star. The evening star is usually seen at the resistance level. After hitting the resistance level and there is a rejection, we normally have a bearish candle follow. Again, these are just examples of the candlestick patterns being shown on the charts. Another example is the bearish engulfing. Now guys, remember that these examples are the most popular as they are very reliable. The bearish engulfing candle consists of one huge bearish candle engulfing a bullish candle. Let's see the example. So as you can see on the chart here, we see that the red candle, which is a bearish candle, totally engulfs the body of the bullish candle. This is a significant indication that the bears are now in control, and as you can see, the market continues down. The opposite of bearish engulfing is bullish engulfing, and of course this usually takes place on support, and it consists of a huge bullish candle engulfing the body of the bearish candle. After a bullish engulfing candle, one would expect price will go up, and that is usually the case as they are very reliable candlestick patterns. Now let's get into some example, or an example. We have a huge bullish candle engulfing the body of a red bearish candle, which is usually taking place at support. As you can see, price went down, found support, and a huge bullish encounter where the bulls take over the market, engulfing that bearish candle, showing an indication for bullish movement. The final pattern that we will go into is tweezer tops and tweezer bottom. That's just as tweezer look. We have those wicks, and the body of the candle are usually equal where the end of the candle is. So at the top you have a tweezer top where the body and the wick meet it's usually equal in price. So now let's get into some examples of what a tweezer top is. We can see that there's a bullish movement up from the resistance level, and the bearish candle that forms next has an equal opening to where the bullish candle closed, and the wicks are practically equal as well. And just as the body of the candle is very bearish, which is another indication it could be a bearish engulfing, it is also a tweezer top. The last and final candlestick pattern, which is very powerful and usually seen in chart patterns, are the tweezer bottom. And once you see the tweezer bottom, it usually consists of price being on support, the bearish candle closes, and when it closes, the opening of the bullish candle is usually equal to that of where the bearish candle closed. So after the bullish candle closes and it forms that tweezer bottom, we can expect price usually to move in a bullish direction. So let's go to the chart and see some example or an example of what it is. Again guys, please remember that the names that we give these candlestick patterns are usually based on how they look. So the tweezer bottom is just giving a look or have the resemblance of what a tweezer is. As you can see, the price is on support, bearish candle closes, bullish candle opens where it closes, and the wicks usually form where the tweezer would look. And then after that, the bullish candle closes. We expect price to move, and as you can see, there's a very massive bullish candle on the third candlestick. So these candlestick patterns are very powerful as long as you remember them, know where they are, because a lot of what these candlesticks do is it entails on where they are, the location of the area of importance that they are. So a bullish candle or candlestick pattern is usually more powerful at support, and a bearish candlestick pattern is usually more powerful at resistance or some zone of significance. So now for the recap, Japanese candlesticks are human emotions represented on a chart in a specific time frame. 2. Candlestick tells the story and the psychology of the market. 3. It is one of the most used techniques in price action trading and technical analysis. I hope that you guys learned something and have been taking notes. If you missed anything, please feel free to go through the video, write down notes, write down and draw the patterns if necessary, and practice and study them. We will go through the charts and try to identify these patterns and see how we would trade these patterns as it relates in a real life situation. Thank you guys for watching.